Today, I'm super excited about this topic. It's helping loan officers retain, recapture, and respond in real time. And I'm thrilled to have Dustin Gray with me, who is the CEO and founder of homeowner.ai, a software that's fabulous about sourcing really a lifetime relationship with the homeowner, which I think is so sorely needed in our industry. So, Dustin, you've had a long career within our business in different ways, especially in the fintechs world. So let's talk about, as you've seen, the wonderful world. We spend a lot of time on new acquisition, but we don't really develop very well the relationship with the homeowner over the length of the time. A variety of services have shown that over 80% of the customers go to another loan officer, which is really obviously horrible and focuses us on always working on the new people, but not really doing much with the others. So, talk about what you see on that issue.
Well, look, I think we spent 20 years training people to respond to leads in seconds, or you're going to miss the opportunity. And when you're looking down at the road, it's very hard to look up and see the horizon. So, what we did as we chased internet leads and honed sources of strangers is we forgot about our existing customers. And that really doesn't matter if you're a mortgage servicer or if you're an individual loan officer. The reality is, it's much easier to work with somebody a second time than it is to continually fill the funnel with new people. And building relationships is extremely expensive and time consuming. But if somebody only works with you once, then that customer is seldom profitable anymore. So that's really the problem we've created for ourselves. All these wonderful
Right.
opportunities to pull strangers into the funnel meant we took our eye off the ball to nurturing those existing relationships and getting them a second time.
Well, I'm with you on that topic. I see it from a sales training perspective when it comes to prospecting. The databases of the former customers are rarely ever worked. And so it is no surprise to me that 80% of the customers kind of lose track of even who was their loan officer. And the emailing, all of the birthday cards, the anniversary of the purchase of the house, that's been the traditional method. And that really is outdated for sure. What are your thoughts on that?
Well, think about real life and think about one sentence. What have you done for me lately?
Yeah, true,
So
true, true.
we're all wired for what have you done for me lately? And if the answer is not much or nothing, or I haven't heard from you in a while,
Yeah.
then there really is no loyalty. So let's just unpack this a little bit with common sense. Loyalty is typically built over many interactions consistently over time. Think of your
Right.
favorite restaurant, your favorite hotel
Mhm,
brand, maybe your favorite airline.
mhm,
These businesses serve you repeatedly, and you become loyal to them if those interactions are positive and they ultimately, provide a pleasant stay or solve your problems, give you a nice meal,
mhm.
etc. So if you really haven't engaged with your customers, can
Right.
you really expect them to be loyal? Well, probably not.
Well, that's for sure. And I think as a result, I think that I saw surveys, and I'm sure you have too, that after about 3 to 6 months, they even forget who the loan officer was. They can't even name who the loan officer is. And likewise, it's no surprise that they don't come back to you when there's some other issue. So talk a little bit about, and what I liked about the software is, and I think it reflects today's type of communication. So, what type of communication that you think is powerful? And I'm sure that's all part of how you really devised it in homeowners AI.
Well, think about what kind of communication you would want to see
Hmm.
wherever you were looking. So whether it was in your mailbox or whether it was in your inbox
Wow.
or your text messages or on
Hmm.
TV, doesn't really matter, but there's a few flavors of communication that resonate with
Right.
consumers. By the way, we're all the customer here. So any one of us who is watching this podcast, we own a home. We see the kind of marketing that is basically constantly,
Well,
bombarding us all day, every day, right?
yeah.
The ones that land tend to be personalized, which really means they're timely to me, right? They're relevant to me. They're giving me some kind of insight. They're actionable. and they can really help me solve a problem. Those are the ones I'm going to jump on and do something with. And remember, intent happens long before you receive a piece
Right.
of marketing. Already in the consumer's mind, they might be thinking about tapping their home equity or moving or investing in a property.
Hmm.
Marketing doesn't create those things, right? That's not what demand gen does. What demand gen does is it builds market awareness, on the other hand, right?
Right.
Don't forget about me. And then at the moment you are triggered to take an action, it's got to land in a way that resonates. And that's really
Yeah.
hard. That means you're not waiting till the moment that somebody needs you, but you're really moving way, way, way up funnel in their consciousness. No different than brand marketers in other industries. So the kind of communication that lands tends to be things that has deep insight about your customer and what their needs are at that given moment. And if you think about that for a second, that means you have to have a lot of information about the person that you are messaging, a lot about them, their household, where they are in their life, what their financial needs are. That requires a lot more, frankly, than most companies to date have done.
Yeah.
And it shows, right? You open your mailbox and it's like, you've been
Right.
pre-approved for this, or hey, would you like renewal by Anderson Windows?
True.
It just, those kinds of things are just sort of put them out there and pray that somebody comes out and
Right.
comes back to you, but they're not particularly effective. So what do? You hit delete or you throw it in the trash.
Right.
The ones that are really good strike a chord because they have some insight and help you solve today's problems and happen to land at the right time.
So talk about from the standpoint, and what I liked about your software is that, in other words, you've took this issue that you're talking about and you made it real time on what is the value of your home, what are the types of things that you need to address if you have appliances and all of that. So talk about how basically that works and how accurate the data and all that gathering component that you have to go through to make it relevant to a person today.
Well, I like to say you have to meet people where they are,
Sure.
which means you have to have information about where people are, not where you want them to be. So let's just talk about home ownership for a second. For many people, home ownership produces predictable challenges. You,
Correct.
as a homeowner, actually want to put your home forth in your kind of stack of life needs, right? It's behind your family, it's behind your jobs, it's behind your
Mhm.
interests. You, as a homeowner, and I embodied this myself, you don't actually want to think about your home. You
Mhm.
just want it to run on autopilot. Now, inevitably, that means people under maintain their homes and then they break, and then your life becomes inconvenient.
Yeah.
So, if you think about the sort of behavior pattern of the customer, what they want is fairly predictable. They want convenience, right?
Right.
Help me take care of my home with the least amount of effort because I want to be with my kids or my friends or doing
Sure.
things at work or traveling, right? When something breaks, or there's a problem, let me fix that problem as quickly as we possibly can to get on with life. If I need to be aware of something, whether it's planning for something or doing something, let me
Mhm.
know and help me prioritize because most things I'm supposed to do, I'm just going to ignore, but I'll focus on the things that I must, right?
Mhm.
If they produce a risk. And then when the moment comes when something is a trigger, whether that's a life event or
Right.
anything that spurs me to act, as a lender, you're already there. So for the homeowner, help me make my life easier. Help me save
Yeah.
money. Help me build wealth in my home. These are the things that I want to do with the least amount of effort possible. The person or organization that helps me do those things and produces that experience is ultimately the one that I'm going to be loyal to because I'm not loyal to an interest rate based product. Money is
Right.
money, right? It's a commodity. And the person who helped me get in the home and get the financing may not even be the person who's servicing my loan. I might not even know my servicer. So that
Correct.
sets up an interesting dynamic, right? If the person who originated your loan isn't even around and you're making your payments to some entity that you've never heard of or barely know, that sets
Right.
up the problem that the industry has today, where, of course, retention's low. You're not really servicing me over here because
Yeah.
you don't really know anything about me. And over here, I have all these problems and I just kind of want to forget about it, but nobody's really helping me with that. So I think that sets up where we are today.
So when you look at the former customer, which is somewhat of a mystery of life to me, because obviously it's a lot easier, someone who's already had an experience with you from a service level component, because you've now handled their loan. And this commitment to sending anniversary cards, email, 10 billion emails, and all these types of things is so old. I'm thinking it's easy, but old. And that is why I think when you look at the data shows the actual success rate is very low, but we still keep doing that. And I just wonder, like, talk about from a marketing standpoint, what percentage of the customers that you could recapture because you now provided relevant information to them.
Would say it's beyond just relevant information.
Right.
It's information that's actionable. And that's the leap, right? So we started this project 7 years ago, and I'd walked into Cotality, formerly CoreLogic's Discovery Center. If you're an executive in the mortgage industry, you might have spent some time there, but you walk
Mhm.
into this room and it's almost like going into an old episode of Star Trek. There's a person there who pulls up every bit of information about a home on this giant wraparound monitor that's 30 feet wide. And you can delve in and get the details of every home going all the way back to when it was built.
Right.
I saw this and immediately said, I want to put that information in the pocket of every homeowner. And I did. Tens of millions of dollars years later, in a partnership and investment from Cotality, we took all of that information, we put it in the pocket of a homeowner. That's great. That produces insight, but it doesn't necessarily produce action, right? So
Right.
I'll give you a silly example, but one that's real. If my home is susceptible to climate risk, there's probably some things that I might want to look at if I live in certain areas of the country, right? I might want to make sure I have the right insurance or might
Yeah.
want to
Mhm.
take certain precautions. So if I get a little ding in my inbox that says, hey, Dustin, your house really is at risk for wildfires, for floods. If I can't do anything with that information, the so what? Okay,
Yeah.
you've told me
Mhm.
something. I've been worrying about this. Yes,
Mhm.
but if you can't connect me to get the right insurance or hire a contractor to future-proof my home, which incidentally either would probably be a great opportunity for a servicer to be right there to facilitate those things. But if I can't do those things, you're just giving me information. You're not
Right.
making that information actually actionable. You're not
Right.
prioritizing even all things I would want to do. So that's really the rub. First, you have to be able to get the information to people in a way that is relevant and timely to them. But then you need to make that information actionable in a way that produces a positive result. And that's hard.
And so, and certainly what I see that certainly the average loan officer does not work the database at all. And
Nope.
so these texts and all, not even texts, but basically emails and all that stuff that goes out. But when you look at the better performers, they do a version of it. And so typically what I see is that roughly they get a third of their business every month just from their version of being actionable. And so we know it works. I mean, it's not like we don't know it works, but this issue of making it easy for the loan officer, that's the middle tier loan officer, is always a challenge within our industry. So, kind of talk about how you looked at this and how you, in other words, so you have this wonderful data and what problem is the disconnect between the loan officer actually using that data. If you make it hard for them, they're not going to do it. That's for sure. So,
Well, I can tell you for certain, as a person who's worked on this problem for the last 7 years of my life,
yeah,
until we reduce this to almost a single click,
just one.
we didn't
We
we
like
didn't
that.
get the kind of adoption we wanted. So first, let's look at what we're really trying to do. You're really saying to an industry, in order to build client loyalty, you have to be the virtual property manager and the virtual asset
Yes,
manager.
correct.
Because if you think about the experience as a renter, it's great because your apartment, you just pay rent. If something goes sideways or a decision
Right.
needs to be made, it's not your problem. That's the experience homeowners actually want. They just want to own the asset. right? So if you think
Right.
about this for a second, you're saying to a lender, in order to engender loyalty, you have to be the virtual property manager, the virtual asset manager. Well,
Correct.
first of all, that's not a job that most lenders or real estate agents have signed up for.
Sure.
Second of all, it's really hard to do that job in addition to the day job of going and filling your cup this week, this month, this
Hmm.
quarter.
Hmm.
And finally, it's hard to do over hundreds of people or thousands of people.
Correct.
So being omnipresent in solving people's problems is challenging enough. You need a system that runs on autopilot. We endeavored to build that system. And I'll tell you, one of the biggest challenges we had is we built the system, but it was not reduced to one click for a loan officer. So if you can't take your world, and by the way, your world traditionally lives in your phone. It lives
Correct.
in your email inbox, right? And it lives in your CRM, maybe if you're disciplined enough to use a CRM. So
Hmm.
your world of everybody you know and want to loan money to lives in those three places and
Right.
maybe in a transaction management system. So what we had to do is say, okay, well, we have to meet our customers, lenders, where they are, which means we've got to help them lasso all their people and bring them into one place because they're typically
Hmm.
scattered. A lot of the time, in fact, the majority of the time, people don't even know where their customers live. They don't have an address. So when you
Yeah.
think about it, if I imported the 5,000 people that are in my phone into a
Right.
marketing tool or engagement tool, most of the people in my phone, I don't have a home address for. Like
Sure.
I do for the ones we mail Christmas cards to, but that's a small percentage of 5,000,
Sure.
right? So we had to figure out how do we get an address, a current address for where you people live. And the reason for that was we can't really tailor a message unless we know where somebody actually lives, right? Once we know where
Right.
they live, we have a ton of information about their household. But until we actually connect an email address or a phone number to a physical address and all the things that orbit that address, we were
Sure.
stuck. And by the way, if we think loan officers are going to come and do that work of going and getting an address for their people, no
Yeah.
way, right?
Right.
So we had to reduce it to one button, which took us 4 years of trial and error to say to a loan officer, let me show you how this works. But then if you're bought into how this works and the data shows us it does, now we have to get it to where you literally push one button and you say go. Once you push that go button, the other painful lesson that we had to learn was all of that information needs to go back from wherever it came. So if I'm used to seeing things inside of TotalExpert, for example, a popular CRM a lot of loan officers work in, I'm not going to change my behavior to work at another platform. I just
Right.
need to see all the information that's happening in homeowner land, which is the vast majority of my customers are just living in their homes and going about their lives. But I need to see that inside of wherever I currently work. The next thing we learned, Pat, is that even that wasn't enough because things related to the home and the homeowner change every day. But we had to figure out how do we percolate up the things that are really important and then sort of put all the noise in the background. Because the other reality is if a loan officer is bombarded, you know, every time a homeowner calls a plumber or goes and looks for some piece of information like, hey, who sold their house in my neighborhood? Those are signals of something, but they're not signals enough to say, drop everything and call this person. So it became how do you reduce the onboarding to a button? How do you keep a machine running in the background, but then update where somebody currently works? And then how do you create a awareness for the loan officer when something actually matters versus the many things that don't? Because if you sort of send somebody 200 alerts a day, well,
Yeah.
it's just going to become noise, right? So those
Right.
were the hard things that we had. We said, wow, we built this great mousetrap for homeowners to solve their problems, but we also had to figure out how do you really, really dumb this down for the average loan officer who has a day job and can't think about yet one more piece of software to pilot or thing to do. That's
Right.
hard stuff.
No, it's very hard stuff, and it's the fundamental issue, really. And obviously, we're still sending birthday cards because we haven't figured it out. I mean, really, that's what it comes down to. I also thought it was interesting when I was looking at it, is that it's just not former customers. It would be, what about turn downs that you've had, or maybe people that didn't qualify at that moment. So it really does expand a pool of people that become. You've had a contact, but it just didn't work out. How do you see that kind of playing into the origination world?
Well, so I look at my former job. I used to be the head of operations at a business called Realtor.com. Most people watching this podcast have heard
Sure.
of Realtor.com, right? We were always chasing Zillow. We were the number two player in a very
Yeah.
very challenging race to the homeowner. And here's what we learned. Even after we took and we scrubbed leads in our contact center, we had hundreds of people working right outside my office, doing this all day, every day. Conversion was sub 2% consistently. And that's after we weeded out kind of the looky-loos and the tire kickers. So if you think about all the people that don't work with you this moment, right? They fill out a loan application and they just hit pause or they go somewhere
Yeah.
else.
Sure.
Everybody that you know in real life, friends, family, coworkers, you sort of lasso the universe. We didn't build for people that you had already closed business with. That's a tiny fraction of your universe of
Correct.
prospects and sphere. What we built for was saying your customers are homeowners. Homeowners are just in some phase of their journey. Predictably, they're going to move every 12 years now, and they're going to borrow every 5 to 6 years. And your job as a lender is to be in front of them and meet them where they are, full stop. So we didn't think about a closing gift, if you will, or a funding gift. We didn't think
Correct.
about anything
Yeah.
other than if most people who are borrowing money already own a home, then you need to meet them where they are, and you need to have this kind of experience for all your customers, whether you've actually worked with them before or not.
Mhm. So is the idea that, in other words, the customer has contacted the person, the loan officer as an example, and then for whatever reason they move to another lender, but you've had that initial contact, in other words, in some way. So maybe they got turned down, but that becomes a universe that maybe they changed their mind. Who knows whatever happened? But that becomes a universe that is somewhat as a grouping that really doesn't get worked at all after that, a no go for whatever reason. So that universe is what we're talking about, really, is that, you might get, 50 conversations, but you only get, three former customers out of it or whatever it is. What are your thoughts about that? That universe is never really talked about in our industry. It's like, well, they're out, they're not worked at all. I mean, that's for sure.
Well, from an ROI standpoint, those are your most profitable
Right.
opportunities.
Yeah.
I think about this in terms of concentric circles. And again, you just go back to common sense. You have your
Yeah.
closest friends and family. Then
Correct.
you have your next tier of acquaintances, people you see
Mhm.
periodically. Then you have a whole group of people that they're still in your world. They're just several rungs out. So I would look at the same thing for lenders and say, look, you're casting a wide net. You're going to pay the most attention to the people closest to you. But make no mistake, a
There's
lot of
other.
people who filled out a loan application now and then bounced, those people are still potentially in market 2 years later. By the way, we saw this data when I was at Realtor.com. We saw people shopping for homes 2 years before they actually bought a home.
Yeah.
So if they didn't buy a home with you in the first 90 days, they were pretty quickly forgotten by real estate agents. Lenders are no different, by the way. But that's really not, that's missing the point. People will shop long before something forces them to buy or borrow. And
Right.
I think that's important to keep sight of. Treat them all the same. If you have a machine that you can use to nurture, then don't let those opportunities just fall on the floor because I think that those are really your playing the long game is where it's at. Especially right now, right? As of this morning,
Yeah.
interest rates are at 6.75%.
Right.
So nobody's going to borrow right now unless they have to. If you're not playing the long game, you're missing most of the market, which is rate locked into a 2022 era interest rate and will borrow only when rates come down a bit or when they have to.
Correct.
So that is the definition of playing the long game right now, because you have to meet people where they are, and where they are is kind of trapped in their homes and not moving unless they must.
Well, this is a fascinating topic for sure. I'll have to have you come back to talk more about it, but share with our listeners a couple takeaways today.
Big takeaways. Every homeowner is your future lending opportunity, full stop. So
Right.
think about it in that term. If you're thinking about it in that term, it becomes how do you engage people? And engagement and loyalty are built around solving problems. It's around being present but not annoying. It's around helping people solve real problems, which,
Yeah,
again, people would love to have the easy button for most things related to their home because they don't want to deal with their home.
sure.
So if you think about what leads you to the next transaction, if these transactions are 5, 6 years apart with lending, you want to be the resource for everything home. That's how you're remembered when there's a bigger ticket item like borrowing money. So think about all the things that you as a homeowner spend money on in a year. Something in your
Yeah.
home breaks, you need it fixed. You're going to optimize insurance and home protection because that's not static, that's actually dynamic. Things in your home should be maintained, and frankly, you don't want to do it. So how to tell me what I need to do or help me get to somebody who can do it for me. Those are all things that basically homeowners want to run on autopilot. And loyalty is built by either making those problems go away when they happen, by
Hmm.
making your life more convenient. And then the last one, which we're really focused on right now, is saving people money.
Yeah.
Homeownership has gotten really expensive.
Hmm.
So you want to have people be loyal to you, make their life more convenient, save them money, and help them build wealth in what for most people is their biggest asset, and keep after it. Don't expect for 5 years to go by and for somebody to think about you if in their head they say, "What have you done for me lately?" And the answer is, "Well,
Not
nothing.
much.
They sent me a Christmas card."
So,
If that's the relationship you have with somebody, you don't really have a relationship.
correct.
So that's
Yeah.
no different than your friends and family and the people in your world in
Yes.
real life, right? The person you
Correct.
see once a year at a barbecue is not really your close friend. It's great to catch up with them, but I think it really comes down to, practically speaking, how do you be present and be solving problems along the journey, not just show up at the moment of need and be like, "Hey, I'm here. Remember me?" Then you've kind of already lost, right?
Yeah.
This also sounds so common sense. What's really hard to do is
Well,
do it across 5,000 people at a time, and that's where you
yeah.
need processes and systems and data to be able
Right.
to keep pace.
With you 100%. I think it's sorely needed, and we need to really move the industry in a lot faster way with certainly the technologies there. It's a matter of really getting the concept that it's just not a transactional, you can make, and a lot of lenders do, and a lot of loan officers, a transactional relationship, or it becomes actually a real relationship, which is really what you're talking about. So, Dustin, how can people get a hold of you if they'd like to discuss more about your thoughts on this? Because you're right on.
Well, it's easy to find me. For starters, we've got a pretty memorable URL. We're homeowner.ai, and you can find me at Dustin at homeowner.ai. And I hope you do, because this is a topic that I'm super passionate about. I've been working on for 3 decades, and frankly, it's a hard one. I get all the collaboration help I can get on it.
Well, I love talking with you with it, and I just think it's such an obvious thing as you talk. I'll have to have you come back and share more because I don't think it's really understood that we worry about new acquisitions versus recognizing, hey, we got this pot of people that if we did something with them, that would be very powerful from a volume standpoint. So I'm with you on it completely. So
I'm gonna
thanks
I'm
for,
gonna leave you with one
yeah,
statistic that
sure.
I think will was insightful to me. I saw it on a whiteboard while I was at Realtor.com. And we showed the graph of people and how many of leads, where your business came from leads and where your business came from somebody you know. And we looked at it over 25 years. So like from the mid 90s to 2020.
Yeah.
So when the clock started, and this is, 1995-ish, 100% of your business was on, people you knew in real life or people, I guess, who came through other forms of demand gen,
Right.
and 0% were strangers on the internet because this was the dawn of the internet. So you'll be surprised to know that by 2020, 23% of people who were realtors and lenders closed business with a stranger. The
Oh, wow.
balance,
Yeah,
so got, call it 80/20 for simplicity. The other 80% were people you already knew.
correct.
And I went, oh my God, we've trained people to chase the 20% to the
Right.
detriment of the 80%. And I could understand why, if your business were selling leads, you would run your business that way, and that was mine at the time. But I just looked at this and said, well, if two-thirds of your customers who are getting a loan already own a home, and most of your business comes from people you already know or have some kind of relationship,
Mhm.
distant as it may be, then the focus should tilt, or at least be better balanced with the hours of the day, serving people that already know you and building loyalty and getting more referrals and having multiple bites at the apple, et cetera, et cetera. That just struck me as completely obvious. But you have to look at the short-term incentives of somebody saying, what could fill my cup and produce income in the next month versus what is going to cultivate over many months or years. And I think we are all very short-term oriented thinkers as humans, right? That we do that to the neglect of the long game. And it's hard to get it right.
No question. Well, we can do another podcast on that topic because the way to fix that is the compensation side on the salesperson side. But we don't want to ever address that. And so, or we try not to. But I think in this new game of a different world, you're going to have to look at what is truly of value to. And is it the new acquisition or is it the previous customer for sure? So you're right. I agree with you completely on it. But I appreciate you sharing everything today. And I love the data. I have to have you come back and talk about it some more because I think it's a topic not really well understood. What we consider value to our former customers or people that we've had contacts with, we've gone down really a much basic level and not understanding like, well, we know a lot more about the individual today. So I loved having you for sure. And so I recommend for everybody to contact Dustin and have continue the conversation. So thanks again, Dustin, and for our listeners, certainly every Monday we issue a new podcast. Join our world at Mortgage Manager Playbook, and we'd love to have you. Thanks so much, Dustin.
Thanks, Pat.
Thanks for joining us today. And if you're looking to become a more effective sales leader, check out the Mortgage Manager Mastery and the new companion workbook at mortgagemanagermastery.com. Until next time, keep learning and keep growing.